Welcome back to the Bryan Devore Connection. I'm your host, Bryan Devore. Long-term care planning is crucial for people who are looking towards their golden years, and an important component of that is long-term care insurance. And here with me today to talk about long-term care insurance, the benefits of it, why people should do it, etc., is my friend Jim Better. Jim, how are you doing today?
Thank you, Brian. I'm doing fine, thank you.
Good. So you are an expert in this field, so I wanted you to come talk about long-term care insurance and why people should get it, why it's an important part of long-term planning. Tell us who you are and why you got into this business.
Okay, well, first of all, let me clarify something.
Yeah.
Yes, I tell people I'm an expert, but you know, Giant, I'm a student. I learn every day about the troubles people have coming to terms with the fact that they need to prepare for their later terms in life. It's really important, and I got into this business, well, I'll say it another way. I started in the insurance business back when Ronald Reagan was president.
Okay.
And for many years, I worked with life insurance and disability and health insurance and in those markets. But 20 plus years ago, my mom, who had been telling my brother, sister, and I for many years that she had inherited money from her grandmother and that when she passed, we would get that money. She was very proud that she was able to hold on to that. I know my parents had some struggles over the years, but she never touched that money. It was sacred to her. But you know what happened? She got cancer, and she fought it for well more than 3 years. And all of that money went into long-term care. She was very disappointed about that, and that was my inheritance. I was disappointed as well. But that got my attention. I asked around, does anybody recognize that this big black hole is out there waiting to suck up your independence and your money? And I was surprised to learn that people were unaware of, had some vague idea that there was a need to prepare for it, but that's all it was some idea that maybe something will happen and somebody will take care of it.
Yeah. Well, and I think that, our society, a lot of times we want to bury our heads in the sand. If we don't think about getting older, then it won't happen. But then it sneaks up on you, and the cost of care is only going up. It's not going down. And, people have car insurance, people have homeowners insurance because of the immediate threat that they feel. They don't even think about the fact that they're going to need something like this in the long run.
Yeah. Well, these Homo sapiens, starting 200,000 years ago, had to fight for survival every day, and it was short-term needs that they had to address. Mm-hmm. And that's still buried in our cerebral cortex, that, right. It's short-term, prepare for tomorrow. Don't go look for problems that aren't there yet.
That's right.
But, as the culture evolves, we pay more attention, should be paying more attention long-term to what it's like, especially in a culture as complex as ours.
Right. So in general then, so why don't people, we talked a couple of reasons about it, why else don't people want to buy long-term care or even are knowledgeable about it?
Well, there's about a dozen reasons for it. One is that it's never going to happen to me. I'm going to be happy, healthy, and dead on the same day and don't have to worry about any of this stuff. The other thing is they expect that their families will jump in and take care of them. And it's true. When an 85-year-old begins to suffer with a stroke or whatever it may be, family's right there, and they'll take care of them. But it becomes a burden. The expectation is that, okay, it'll happen quickly and we won't need a lot of care, but it isn't like that. Parkinson's, for example, can be 10 years of needing care. So what does that do to a family? Veterans benefits. People expect that, okay, I was served in the military, but there are so many roadblocks, and in most cases it's means tested. So you can't have a lot of money to qualify for good veterans benefits. And even if you can qualify for it, the reimbursement level is about $2,100 per month. So it doesn't really cover very well, no. Another reason people will rely on the government. They say, okay, whatever happens, Medi-Cal will be there for me. And they're right, Medi-Cal will be there for them. The problem with that expectation is that we got this whole bubble of people called baby boomers that are gradually moving into the time when they're going to need care. What's that care going to look like? You look at the better assisted living facilities, nursing homes, even home care agencies. You look at the good ones, they don't take Medi-Cal. Okay, you're on your own.
Right.
If you're going to rely on Medi-Cal, be prepared to be disappointed in the care.
Right. So, and a lot of the work that I do in my real estate work is with seniors and their families, and they're looking at their futures, and they're maybe moving to senior living communities or whatever. Costs are going up, like you said, and they don't know how they're going to deal with it. In a lot of cases, the people I work with have no family. And you mentioned the family will hopefully step up. What about the ones who don't have family? If you don't have children, who's going to step in and help take care of you, pay for the care, et cetera? So, it becomes, like you said, sort of that black hole situation.
Yeah. Well, the biggest problem that I see, and I hear it many times, is single women. And women who will eventually be single, because statistics say women will live more than 3 years longer than their male spouses. So what's that going to look like for them? If they're one of my most recent clients is married for a second time. She has no children. He has 4 children, and he's 7 years older than she is. So she's like I said, when he goes, what's going to happen with the resources? It's going to go to them. So she wants to protect herself and prepare for her own future and be able to have a peace of mind and be comfortable that whatever the resources she has, the insurance policy will take care of making sure that she's in good place and she's well cared for.
Right. All right. So now we've talked about the reasons why people don't do it. What are the reasons why people should do it? What does it cover? How does it benefit people?
Well, the biggest resources for people who will pay attention to the message are those adult children who are putting mom or dad into care. And they're hit this cost how much money? And those are the people that are most likely to say, okay, I've got to make sure I've got my powers of attorney in place, and I've got to have a plan to pay for the long-term care expenses. What does long-term care expense cost? Well, assisted living, or room and board, as we call it in California. That's about $6,000 per month. Okay, well, that's okay if it's 2 or 3 months, but what happens if it's 2 or 3 years? Where does that kind of money come from? And, go to the granddaddy of them all, nursing home care. A good place for a private room is, $12,000, $14,000 a month, Brian. And that's why the adult children get shocked into saying, okay, I got to do something about this because this is, I don't want to burden my children with it. And that's one of the biggest reasons people do buy long-term care insurance, is that they don't want to be a burden to their families.
And so to that point, unfortunately, it's too late for the person who needs that $12,000 or $14,000 a month care. They can't get long-term care insurance at that point. So the adult children are thinking and planning, hopefully, that they need to be the ones to buy it. So you really do have to take advantage of this type of insurance earlier in life. Don't wait for it.
Yeah, the earlier the better, for a lot of reasons. One is the likelihood of being able to qualify, because it's insurance and you have to be medically underwritten. And the younger you are, the less likely you are to have a disability that would cause a declination of a policy. And also the cost is lower. And the insurance industry is pretty clever. I mean, even people who are in care already, there are tools and there are instruments, financial instruments, that people in care can use to help supplement the cost of long-term care. But those people who are in their 40s and 50s have the best advantage. For example, insurance industry has long-term care policies that will be paid up in 10 years. All right, so if I'm 55 years old and I go out and get a policy that's paid up in 10 years, that means I don't have that expense when I go into my retirement years, and it's paid up. Those are the lucky people, the ones who pay attention early enough to be able to get a contract that they can qualify for, that becomes more affordable, and will be paid up at the time when they're looking to shed expenses, because now it's fixed income time.
Right. Yeah, and that's the big component of it, is when you're in your 40s and 50s, assuming you have the ability to earn more money, but when you're on a fixed income, you don't necessarily have the ability to earn more money. So you're kind of stuck, but the cost may continue to go up, and that's why you need the long-term care insurance.
Yeah, and that's one of the really important elements of a long-term care insurance policy, is a built-in inflation factor. There are 3 elements. There's a pool of money, because essentially what you're doing is you're buying money. You put down $100 and you'll get $1,000, or you get $500. That's how the insurance works. And so you buy average policy size is $300,000. and it will pay out at the rate of $5,000 per month, or $750, whatever you choose. And then, of course, the other most very important element is how fast do you want this to grow? If the inflation for home care, for example, is rising at 4% per year, you want that benefit pool, the money pool, and the monthly benefit to be going up at the same rate.
Got it. So it covers whatever the expense is. Like you said, it's money. If someone's living in a senior living community, it pays out. If they have home care and they're aging in place at home, it also covers that too.
Yeah, it does. Yeah, and that was in 1998 when the HIPAA laws were passed. There was a model bill that the insurance department, the insurance commissioners of all 50 states got together and said, okay, every policy should have these elements, and that makes it tax qualified. Tax qualified means that any money that you receive from the insurance policy is tax free. So wait a minute here. If I put $100 down and they're going to give me back $400 for my long-term care, and that's tax-free, it's a big selling point for people.
It's a no-brainer for sure. Yeah. So, all right, so you may not say you're an expert. I think you're an expert in this, and people definitely want to learn more about this. Your contact information is on the screen, so we have your phone number, your website, and so forth, so people can reach you with any questions they may have and get the conversation at least started. For how they can take care of themselves in their later years.
It's very important, and I feel gratified when people say, yeah, I got to take care of that. That maybe they buy an insurance policy, maybe they don't, maybe they find another way, but they address the issue. And addressing the issue is the money part and the legal part. You've got to have those powers of attorney in place in order to make sure that the dreams and the wishes that you've built your life around can be executed properly.
Absolutely. Jim, thank you.
My pleasure, Brian. Thank you for the opportunity.